Hey, welcome in everybody. Welcome back to my channel. And today we're actually going to read a few articles covering our favorite precious metals, gold and silver. And we're going to focus on Wednesday's Federal Reserve meeting where expectations of a minimum 0.75 basis point rate hike up to a full 1% increase are expected. So we'll cover the articles. I'm going to give you my individual thoughts, especially for prospective buyers and sellers of physical gold and silver. All that plus more when we return. Hey everybody, and welcome back to today's video. So if you're a first-time viewer here on the channel, first let me take a minute to thank you for coming in today and checking out my content. I'm the Florida Stacker. I've been running this channel here on YouTube for a little more than 3 years now. That's right, we just passed our 3rd anniversary, and I'm in the process of really trying to jumpstart this channel once more, kicking off a new campaign of unboxings of physical precious metals, as well as covering investing in gold and silver mining companies, royalty companies, and of course, keeping you informed on the market, the things that drive the market. Why are the prices moving this way or that way? Why is the supply increasing or decreasing? Those are the things that we're going to try to tackle here on the channel, all things precious metals, getting down to the coins themselves, the bars themselves. We'll break it all down. So gold and silver have long been hailed as safe haven investments, and while their performance against inflation, namely during the last couple of years, has been pretty dismal to say the least, it has mostly been a result of the unexpected strength of the US dollar. All right, so even though inflation has been increasing, the fact that the US dollar has been so dominant against other currencies, because the truth is their energy crisis is worse over in Europe and in several other parts of the country than it is here in the United States. Their inflation crisis is worse, of course, with that, as energy really does drive everything. It's how the world operates. So here in the United States, it's been pretty bad the last couple of years. Most assets are down. Stacking has been less desirable to a lot of people because of the fact that prices have been falling, while premiums to purchase physical metals have been increasing. And pretty much the same thing's been going on with stocks and cryptocurrencies. Just things are generally down given the current Fed cycle and some really piss poor decisions by some politicians, if I could put it lightly. So I do have an interview coming up soon with Lior Gantz. It'll be the 4th time that we've met here to discuss precious metals on the channel and the direction of the market. But before we post that, let's go ahead and get to some articles here, because Wednesday, the Federal Reserve Bank in the United States is once more expected to push its benchmark borrowing rate up to about 2.25% or 2.5%, depending on the increase that we get Wednesday. So in my opinion, with those rising interest rates, that is going to make other safe haven investments like high yield savings accounts, what are we talking about here? Just basic savings accounts, bonds, CDs, things like that, more desirable because they're actually going to begin paying a yield. And as you know, our precious metals do not. So it's another competitor to holding our metals. Maybe be more sellers in the market, we shall see, but higher interest rates generally not a good thing for gold and silver prices. So let's go ahead and get to the first article here, and we're going to start with the silver price forecast. This is by FX Empire. Going to be reading this here to you unedited, okay? So if I make mistakes, bear with me. I'm a human just like you. So silver markets have initially gapped higher during the session on Monday, but have also turned around to show signs of weakness. By doing so, it looks like we are still respecting the trend line above. It's a nice looking silver bar we got there. Let's see if we can scroll down. Silver market technical analysis. So silver markets have gapped to the upside, kicking off the week on the right foot. However, we have turned around to show signs of exhaustion, and therefore it does make a certain amount of sense that we are paying close attention to this trend line. The trend line has been an area of extreme resistance as of late, especially as the 50-day EMA sits right around the same place. Okay, there's going to be a lot of technical analysis talk here in some of these articles, but I'll do my best to break that down for you. Ultimately, I think this is a scenario where you are looking to see whether or not it can break out. All right, they're looking here to see if silver can break out of this price rut that it's been in, hanging out between $18 and $20 over the last few weeks and months. So if we can break above the $20 level, there you go, then it's likely that we will go much higher. However, I don't necessarily think that's going to happen right away, and I do recognize that this is a scenario where you're trying to figure out what to do with yourself from a longer-term standpoint. Okay, the best advice I can give most of you that are holding is to continue to hold. Now is not the time to sell, and it may not yet be the time to truly buy and capitalize on the lowest prices we've seen in a while, because, as mentioned, interest rates that is, are rising. In fact, I will be watching with great interest to see if we break down below 19 level, because I think that could be the sign of a fresh selling that a lot of people will jump on. After all, silver is a precious metal, but also an industrial one. That's a big thing there with silver, guys. Remember that it has a much stronger industrial influence. That is, industry has a bigger influence on the price of silver these days than monetary policy. Keep that in mind. That's important, all right? The market has shifted. The market will almost certainly continue to be noisy, and I will pay close attention to the U.S. dollar, as there is a huge negative correlation. That's right. As the dollar continues to stay strong, it will cap silver. But let's take a look at what this guy here has to say. I briefly started this video earlier.
From FX Empire, this is Chris taking a look at the silver market, and you can see that we have seen a lot of noisy behavior during the day. It looks to me like the market is going to continue to see this downtrend line and this 50-day EMA come into the picture, showing signs of resistance. So with that being the case, I think we've got a scenario where you're looking to fade rallies. I do think that eventually we're going to have to decide on 20 and whether or not we can break above there. On the other hand, if we break down below this hammer, it's likely that we drop to 18. So it'll be interesting to see how this plays out. I do think that given enough time, we've got a situation where we're going to have to react to the U.S. dollar and the Federal Reserve probably on Wednesday more than anything else, as that interest rate announcement and, more importantly, the statement and or press conference is going to be front and center.
All right. So, back to the point here, guys. There's a lot of folks expecting that the announcement Wednesday will actually work against the price of gold and silver. And that strong dollar, not tied directly to interest rates, but it continues to exist and is causing quite a bit of panic and pain in the precious metals market for us stackers, as well as those investors and those whose livelihood depends on metals prices, of course. So apologies for the ads here. I'll try to close them out as best I can. So we got another article here. This one is by investing.com, namely on the precious metal gold. Gold inches up, but pinned below 1,700 as Fed jitters grow. So this is by Ambar Warwick. Investing.com, gold prices recovered slightly from recent losses on Monday, but remain pinned below key levels as markets awaited more policy tightening measures from the Federal Reserve. Spot gold price rose 0.2% to $1,678 an ounce, while gold futures rose 0.2% to $1,687.30 an ounce by 20:03 Eastern Time. Okay, this is going to be, let's just double check real quick. So this is on the 18th. So this was yesterday when this article was released. Bullion prices slumped to a 2.5-year lows last week after red-hot U.S. inflation data showed that the Fed was likely to tighten rates by a large margin during a meeting this week. Okay, so if you don't remember, there was quite a bit of speculation last week that the CPI number would come in lower than the previous month, and we would more or less have seen that high, right, in inflation here in the United States, because people were seeing energy prices down, right? And we know this, we talked about this just a little earlier, energy moves the nation, right? Trucks, trains, airplanes, ships, you name it, everything has to move, requires energy to do so. You're watching this video right now, requires energy to do so. The whole world operates on our ability to have cheap, affordable, and clean, really, energy going forward. So with that, this high inflation continued, however, because even though energy prices came down, the cost of shelter, renting anything here in the United States, affordable housing is constantly continuing to face more pressure than it has in previous years. And there's just a general housing deficit, especially in those areas that people want to live. Throw in the fact that homes are at all-time highs in value and interest rates are creeping up. It just makes shelter more expensive and food the same way. So once more, let's go ahead and get back to the article. So the Fed was likely to tighten rates by a large margin during a meeting this week and likely for the remainder of the year. All right, that is the expectation. The data boosted the dollar to near 20-year peaks. Can you believe that? All right, so there you go, right? Silver stackers. The dollar is at a 20-year peak against some of these other currencies out there. It's what's really keeping silver down. And also supported U.S. Treasury yields, which in turn drove capital away from gold. We talked about that, safe haven investors, right? Prices of the yellow metal slumped sharply from 2022 highs as the Fed began hiking rates this last year. We are no longer in that low rate cycle. Gold now faces an uphill battle at above 1,700, a key support level that it lost for the second time this year. Last week, movements in the yellow metal are expected to be muted ahead of the Fed decision this week. That's right. I don't expect a whole lot of up and down, but the expectation is that interest rates will hurt the price of gold. The Fed is widely expected to hike rates by 75 basis points at the conclusion of a two-day meeting, with traders also pricing in the possibility of a full 100 basis points hike. The U.S. benchmark interest rate is expected to end the year at over 4%. So this move would bring us to 2.25 to 2.5%, friends. And here they're saying that we're going to see somewhere near 4 by end of year. So we are not out of the pain cycle. Okay, guys, we are not out of the pain cycle. We are knee deep in it. And as long as we stay in this cycle of rising interest rates and high inflation, you're gonna see that cap remain on top of precious metals prices. Okay, among industrial metals, copper futures rose. All right, copper's looking good, obviously due to green energy aspects with that base metal. But also because it's getting incredibly hard to source, right, without going overseas, especially to those undesirable nations. So let's move on to the last article here before we wrap things up. So gold slips as Fed fears swirl before Powell's decision day. Pretty much the same rhetoric here. Gold slipped as investors brace for a Federal Reserve interest rate decision that risks putting more pressure on the precious metal. Uncertainty over the Fed's move is leaving gold traders unsure themselves as to where the bullion will go. As where bullion will go, that is. Okay, well, it's not going anywhere here. It's staying in my safe, staying hidden away, because I want to remind you all real quick before we move on that gold and silver do more for you than just potentially make you wealthier, right? You buy at a certain price and it rises in value, and then if you sell, well, potentially you have more buying power, more wealth, okay? They offer you that economic protection too, because it's an opportunity for you to put some effort as far as your portfolio is concerned into something that is not on the ledger. All right, we're not talking about a broker holding your wealth here, or a cryptocurrency exchange, or your home. Obviously, most of us have a lot of wealth wrapped up in our personal homes or investment properties and stuff, but it's really hard to get that cash out. So gold and silver offer you that protection. It's something that you could look at liquidating if you run onto hard times, or just to hold, right, for economic protection for future purchases, maybe buying a home, funding a college education. Who knows? So there's a lot more to gold and silver than just making cash. Okay, so the metal slid as much as 0.9% Monday, reversing earlier gains to extend September's slump in the face of the dollar's gains. There it is again. The decline comes after Thursday saw gold sink to its lowest price since 2020. Market expectations are for the Fed to raise interest rates. Okay, we've covered that. Let's get to this quote here. If they aren't as hawkish, you're going to see gold prices rebound back from its flow, Phil Strebel, chief market strategist at Blue Line Futures, said in an interview. On any kind of softer tone in Jerome Powell's press conference, you could see gold futures rise on there. All right, so, if they don't raise rates, or if they do raise rates, 0.75 or a full point, but the future forecast looks like this could be slowing down, well, then I would agree with that. But I just don't see that happen, especially because so many people see us increasing rates all the way up to 4% on that Fed funds rate. So bullion has slumped this year as the Fed's aggressive monetary policy undermines non-interest-bearing assets while boosting the dollar. Meanwhile, the European Central Bank is also expected to continue lifting rates in October and beyond, said Bundesbank President I'm going to go with Joachim Nagel. I don't know if that's right. London's gold market is closed Monday due to the state funeral of Queen Elizabeth II. May she rest in peace, which will likely reduce liquidity. Okay, so let's take a look real quick at the prices. You can see here, gold currently, I'm going to go ahead and hit a quick refresh just to make sure. Yep, we're sitting at $1,683, so still below that $1,700 level. You can see here we have been trending down on the week. And if we look out year to date, did have a little action earlier in March and April, but it has been pretty much on its way down since before the summer kicked off. So let's go ahead and take a quick look over at silver, and it's the same thing, still hanging a little bit below 20 US dollars. There you go on the week, a little bit down on the week, and let's go year to date, and the same more or less chart pattern has emerged here for silver. A little bit of positive action in the price in February, March, and April, but things have definitely trended down over the summer as inflation has really soared and interest rates are on the rise. So guys, I'd like to thank you all for watching today's video, and I really do look forward to seeing you in the comment section down below, seeing you guys interact together, and also I will be responding to your comments. For those of you that are looking to get started in precious metals, I do have a link down in the video description section, which I would like to share with you. And I wanted to talk about this because AppMex.com actually reached out to Florida Stacker and created an affiliate link for me. AppMex.com can be a little pricey on some of the more common items, but from time to time, they do have some pretty, truly amazing deals. And let's not forget, for our collectors out there, all of the exclusive to AppMex options that they do have. So on top of that tremendous inventory, I've said it so many times, AppMex, kind of a double-edged sword, right? You do pay a little higher prices on some things, but you can also, if you want a 1983 half-ounce gold maple leaf, that's the place for you. You're not going to find it anywhere else. So if you're interested in supporting the channel, I would greatly appreciate it. I'll go ahead and have that link down below. Any purchases you make, Florida Stacker does get a little kickback at no additional cost to you. So thank you guys for checking that out. If you're interested in shopping at appmex.com, thank you again for viewing today's video. And if you haven't yet subscribed, please consider doing so, and I'll have some more content out for you here soon. I do have a couple unboxings coming up. Stay tuned, my friends. Thanks for being here, and we'll talk to you soon.
Thank you for watching our video. I hope you subscribe to our YouTube channel.